are in listen-only mode.
Good afternoon, everybody. Stan and Jack here for theartofchart.net, and we are doing a webinar today on technical patterns that you can profit from. And today our agenda, which I'll go over in a minute. Before I do that, though, let's go over our disclaimer. And the Art of Chart is, we primarily are an educational website. We do webinars for educational purposes only. We're here presenting material that is basically technical analysis, and we try to keep our subscribers on the right side of the market. We're not here to issue trading signals. We hope that you take something away from what we do here in terms of our educational webinars. And today's webinar, we're going to talk about different kinds of patterns that can help you in your trading in terms of helping you to profit. Now, what I want to do, and I do this for the new folks that are attending the webinar, is just to talk a little bit about the site. And for those of you who are new and where you can find things. So usually on the front page of the site, of course, a 30-day free trial. I don't know many sites that do a 30-day trial. They do 14s or 10s or whatever, but we do a full 30-day. And we let you see everything we have on the site, and then you can pick and choose which services you want. But and we usually have a free webinar posted here as well. That's always something to look for. The other thing is we have typically 3 blog posts that are important every week. We have a monthly post, which is our free webinars. This is the page where you will find the recording when we're done. Okay, so go to this page. You'll see this recording up in roughly an hour or so. The weekly call is a post attempting to demonstrate how to trade futures. And the number of people that know how to do technical analysis, that's always good, okay, in terms of having a plan, right? But knowing how to trade, knowing how to manage risk, I find that that is probably the biggest issue, okay, in traders and with our subscribers, frankly, okay? And we try to do risk management webinars every once in a while, but this is a clear demonstration of how to trade futures, and we are up trying to remember how much we're up. I think $83,000 so far since last October, and we're only trading 3 contracts per instrument. Okay, and our hit rate is like 75%, which is which we've seen that number before, Jack and I. When our calls are, if our calls are aligned, that's the kind of hit rate we get. Okay, and so. And when our calls are not aligned, that's something for you guys to sort of look at and say, okay, this is where I need to maybe take additional care. Our options service is a public service. It is free. You'll find it on this web page. I'll just show you the positions that we're in right now. I think we have a total of 6 positions. We are up 18% in 6 days. Our Russell trade, I think today was up 30%, if I'm not mistaken, something like that. Let me just find the options post. So these are our current positions in the options portfolio, and each position is roughly 2.5%, 3% of your overall portfolio. So this is an example portfolio for a $50,000 account. We have a spread in VXX, the Russell, Tesla, EEM, and IBB, and we're going to be adding to this this weekend. So this comes out every Monday. The other post I just introduced to you comes out every Sunday. So these are things you want to look at every week, in my opinion. So with that said, the webinar, Technical Patterns You Can Profit From, Part 2, we did one a month ago just like this. Now, the way Jack and I look at patterns, and we're going to increase the numbers of patterns that we look at every month here, but we look at continuation patterns, trending patterns, and reversal patterns. And so this month we're going to look at continuation patterns, flats, which is basically an Elliott pattern that signals a short-term reversal in the direction of the main trend, okay? So it's a pullback. It's a pullback, and if you know how to recognize it, you can predict where it will end, and it will help you predict, you know, where you might be able to add or get long if you're day trading or whatever. Flags are a channel or a pennant, and basically what it is a short-term reversal pattern in the direction of the main trend. And then there's also an expanding leading diagonal. Now, this is an important one. After you have reversed, it is the very first continuation pattern you typically see off of a bottom. I'm going to show you an example in wheat. And so it's a continuation pattern in the direction of the new trend. Okay. Trending patterns, we talked about this last time. We're not going to do anything there. And reversal patterns, in terms of reversal patterns, we're doing something different today we are going to start characterizing RSI patterns. Jack and I do a lot with RSI, so we are now opening up a new category of patterns called Art of Chart RSI Patterns. And today we're going to talk about strictly the reversal formations on RSI, what you can see and how you see it and examples of them. And we have 3 or 4 we're going to share today. So that's basically it. Jack, anything you want to add?
Nope, let's go.
Okay. We're going to talk about flats first. Let's get into it. This is what a flat typically looks like. Okay. This is what I would call the origin. So, you know, we have an impulse coming from down here. Here comes the impulse. We hit this point here. We reverse. We do an A. We do a B. And then we do a C. The C is usually lower than A. Okay. But there are 2 forms of a flat. One form is the B is not as high as the origin. But the other one is the B is higher than the origin. Okay, and you see this very often. The easy way to spot these basically is you typically see 3 down, you typically see 3 up, and then hang on, folks, because you typically then see 5 down. Okay, and this is what you want to catch. You want to catch the C wave. That's the setup. Okay, in a flat, and that's a counter trend move. And typically from the C, then you reverse in the direction of the trend. Okay, and typically, by the way, in this 5-wave sequence at the bottom of it, you have very clear divergence on RSI. Now, to show you a very clear example of this, let's take today's action on the E-mini. Okay, on the Twitter feed today, I said we have a possible flat. We have to see what happens at the open. Okay, so what happened here? We had a 3 down. We have a 3 up, a little triangle formation here. Okay, little triangle. We broke up, and right at the open, what did we see? We saw plus 1,100 ticks. Okay, and at an open, when you see that many ticks, my experience is a high percentage of the time it goes in the opposite direction. Okay, so that's just something to look at. That's what we had today. And we said watch for 51s, that we could see 51s. That would be the flat target. Now, how did we know that? We looked for the 1.618 fib extension. Okay, so from the Y here, here's your A wave. Here's your B wave. Okay, this is the B wave in this case is higher than the origin. Okay, this is an expanded flat. And then, of course, you see the C wave. The character of a C wave, everyone, that's the character of it. It is an impulse. It doesn't mess around. It's not overlapping. It is not corrective in any way. It is just a punch in the face. It just goes. Okay, that's the nature of a C wave. So you want to really look for those where you can. Okay, and so that's an example of a flat. Okay, and that's a very, very current example because this is a 5-minute chart. And just to make the point, you can see a flat on a 5-minute chart. You can see a flat on a monthly chart. Okay, they exist on all time scales. Okay, let me show you one other example of a flat. Now, how can this help you? Well, first of all, if you're day trading or if you're swing trading and you see a very large flat on a daily basis, you can play the short, okay, the counter trend swing. I wouldn't want to play these. These are hard to trade, everybody. I mean, this is hard to trade. And by the way, day trading, you want to get 4 handles. Yeah, you know, I can make 4 handles on days like this. Okay, just paying attention to RSI and so forth. But you know, you want to catch the more violent moves or the more volatile moves basically in trading, and you want to be able to recognize them. So, you know, a flat for me is 2 opportunities. First opportunity is, of course, the counter trend move. It's very impulsive, and the second opportunity is when it reverses, it typically reverses and you typically make a new high in the direction of the trend. We haven't done that yet in this case, but that is coming in my opinion. So that's one example, Jack. I'm just going to throw out another one. This is a larger scale example, which is gold. Let's look at gold because we've had a flat in gold. And by the way, this one is here. Okay, you have and I have it as a WX because it's larger scale. Okay, so here's your A wave, here's your B wave, and there's your C wave. Okay, very clear example of a flat. We didn't get to the 1.618, but sometimes you do, sometimes you don't. But I also need to say this: a flat very often will extend. Okay, so if you look at natural gas right now, okay, natural gas, we have an expanded flat. We have an A, a B higher than the origin, and we have a C wave going to the 2.618 on natural gas. So the 1.618 is typically an area where you find support. but also the 2.618 Fibonacci-wise is also where you find support in an extension move. Okay, so sometimes, and by the way, natural gas is famous for hitting extensions. Okay, just famous for it. So every instrument kind of has its own character, if you will. So natural gas going to the 2.618 is not unusual. So, and the other thing I want to mention, the 5-wave sequence here, look at the divergence at the end of the flat. That is very traditional. You don't get divergence everywhere, okay? And I don't believe in divergence everywhere, but in certain structures you get divergence. And this is one of those structures where you get the reversal and a new high, where you get divergence on RSI. That is just something to pay attention to. So that's a flat. And if you have questions, everybody, please post them, and we will be discussing these at the end, or any questions you have at the end of the webinar. So at this point, Jack, I'm going to throw it over to you to talk about flags.
Great, thanks, Stan. All right, tell me when you can see my screen.
Not there. Wow. There it is.
We got it now? Okay.
Yep.
Okay, now flags really, there's to a certain extent, everything that you see defined as a flag or a channel or etc. To a certain extent, there's crossovers between all of these because it's all about time frames. Each pattern contains a lot of smaller patterns of all various types and of differing trends, and so I mean the reality tends to be delivered in shades of grey rather than black and white. So, but I'll illustrate that point with a few examples here. But basically, flags fall into a few basic variants. One of those, and I'm using, this is the SPX 1-minute chart from today. And there's a very, very nice example of a flag here. And this was when we came off the low today, which we nailed using another flag variant, which I'm going to be talking about later. But this one here, we have a move up here, and then we have, this is a rising wedge, and it breaks down into a falling wedge. The normal trending patterns, this is just a small trend. But in the context of the bigger picture, this is a flag. It's a falling wedge on just on its own. It is a falling wedge flag on the bigger picture. And what do we do here? This is what I was talking about rising wedges in the last one when I was talking about the correct targets for a rising wedge. This one has broken down. It has made an almost precise 38.2% Fibonacci retracement, and then the flag has broken up and it has continued into a higher high. And then it's pulled down and so on. But this is a totally routine flag setup that you would see all the time, and that's one we got today. In terms of the, hang on, I'm just going to show. Let's have a look at a couple of futures charts. Let's have a look at the NQ 60-minute. This has a very nice example of a whole series of these. Here you've got an impulse up. I mean, to a certain extent, there is a significant crossover between just a retracement move and an impulse move, and an impulse move and a flag. A retracement move, to a certain extent, is a flag. I generally narrow the definition as to I will not generally regard it as a flag if it is more than the 61.8% retracement of the previous move. And
the thing to mention about that flag right there, that flag is also a flat. Very clear 5-wave move with divergence. So flags and flats, there is a crossover. Not always though.
And it's also a channel.
Yep, that's typically what you see in a flat. It is very often a channel.
Yep. Inside it, you will see a double top, a double bottom, and a triangle. The fact is, there are a lot of different patterns develop on different timescales. But this is all a coherent whole. But basically, this is trend, consolidation, etc. You see another flag set up here. You see another flag set up here. They happen all the time. Reversal setups, trends, etc. On the bigger picture, and this is just for perspective, really. I'm just going to show you the gold monthly chart, because this really hammers it home. Okay, this is the move down from the 2011 high. What is it? It's a slightly more than 50% retracement of the previous trend, which was this one. What is it on the bigger picture? This is a flag. That whole move is a flag. This is a bull flag that has been forming over the period of several years and is so large that most people will never ever recognize it as a flag. But that's what it is. And if this was on the 1 minute chart, and you see things like this on the 1 minute chart, and you saw something like this on the 1 minute chart today, that flag I was showing you, this would be an unambiguous bull flag. And that's what it is on the monthly. It is likely to break up. When it breaks up, it is very likely to come back and retest this high, and there's no particular reason to think it won't continue on from there. Same patterns, same rules, different time frames. All right, let's have a quick look at the DX 60 minute. I'm just going to show the last of these trending patterns on there. Here, if you look at this, I mean, this is again part of an overall pattern. I think this is a left shoulder, this is a head, this is a right shoulder forming. But if we look at this move down from the high, this is impulse, retrace. What's the retrace? It's a channel. That's a flag. This has come back, it's back tested the low, and chances are this is a double bottom, which is going to take us back to there, which is the greater head and shoulder neckline, and then US dollar is going to start down the move, which is going to last quite a while. We're expecting this move to last all year. It may take much of next year too. So the US dollar is likely to drop a lot. It's reached our target area. It's going to go down, and then then the world will turn a while further on. It's people always think that this is people always think these things are more dramatic than they are. But the thing is, in the short term, impulse down, retrace, and down we go. Very routine. Just another flag. There are so many. All right. Other kinds of flags. We've also got triangles. I'm going to show a couple of those, and I'm going to show one of those on the yen monthly. This is JPY USD, and this is just again to give you perspective. This is a rising megaphone that started in 1990 and finished in 1995. Took the yen from 36 to 123. Hell of a move. Right. It then tops out there, and it has what actually is, the Fibonacci's is actually looking at this high here, but if you look at the Fibonacci's from this low to this high, this is almost exactly a 61, 61% Fibonacci retracement of this move. This is a flag. It's a falling wedge flag, another falling wedge flag. What happens when it breaks up? Well, it takes a while, and the reality is things on the monthly chart do take a while. But where does it go? It goes back and it does a full retest this high and continues up. It doesn't get a lot further, but it continues up and it gets there. This is the triangle, and this is, I don't know whether one would call it a flag exactly, but arguably it is a flag. It's I'll look at does the usual triangle thing, breaks up, does a full retracement. This is very routine. As part of that, it's probably forming a head and shoulder pattern. I was talking about that in the last one. Let's have a quick look at the ES 60 minute, because I had a nice one today. Well, recently. This was actually from last week. This is a descending triangle forming. Again, it's a flag. It's it breaks up, continues up. Yep. So it's one of many.
Mm-hmm. Yeah, triangles are a great example of a continuation pattern, which we did in the last webinar as well. If you guys want more details on it.
Yep, but the thing is, I mean, it's an artificial distinction to think that flags are separate from other patterns. Flags tend to be other patterns.
That's right. It's a broad category.
This is it. It's actually more a statement of time frame than it is of what it actually is or what it looks like. Right. That brings me to a new one I've got. Now, just have a look at the chart I was looking at this morning on SPX. Let's have a look at the 15-minute chart. I think it is. Yeah. Hang on. Right. I'll just pull that up in a second. Now, I was talking about this on my post this morning, and we actually managed to nail the day on this. But I mean, it wasn't just on the basis of this pattern, because we were also talking about the flat. But what we were talking about here was, I was talking about this little double top here. We had the break below channel support, and I was talking about this double top here, this high, etc. So there's a little double top here. Now, what's that got to do with the flag, you think? Well, This is a pattern that I've developed, and we're starting to give names to various ones we've developed. This will Rsi back, but this one is actually a flag variant. It looks like a double top, but what it does is it breaks down slightly, it fails, and then it goes straight back to the preceding high. That is a flag. There's a flag in function, and it's we're setting it up as a new name. I mean, normally these would be just seen as a failure, but it's not a failure. This is another flag setup, and what we did this morning was we predicted it would close, it would break down from the double bottom, and then we predicted that it would find reversal. Stan had 2352 nailed from there. I said if it reversed from there, it'd be a jack-in-the-box pattern. Should head back to the high, and we made it most of the way back, a couple of handles short today, and I would expect to see that tomorrow. It will almost always, well, certainly 90% plus, go back and test the preceding high. It will usually go slightly higher.
Yep.
So that is a jack-in-the-box flag. There is another variant of these which is head and shoulder patterns, which work in exactly the same way. But I've been talking for years. If you're one of my longer-term readers, you will remember me saying the most likely place for a reversal pattern to fail is on the break below the neckline or double top support, and that is this jack-in-the-box flag. That's what they are when they fell there. And as we were showing today, that is predictable. So at least to an extent. Everything is predictable to an extent. Never completely. All right, just having a look at time frames and perspective. I've already had a look. I've already showed you the gold chart. Just to have another look at that. This is very much perspective. This contains many patterns. This contains many patterns. Overall, this is a bull flag. Then you go down a time frame, the trend might change, and you're looking at a different pattern structure, and within that is a smaller and different pattern structure still, interlocking all the way down to the 1 minute chart. A lot of these names are a matter of perspective. This is a major bear market pattern from the point of view of looking at it, just from the last 7 or 8 years or something, but really on the bigger picture, this is a bull flag retracement, and that is something very important about the way these things are defined. Okay, great. Throwing back to you, Stan.
Okay, great, thanks. The thing about patterns that I really like is like I said with the flat, for example, you recognize the pattern, the A and the B, and then you trade the C leg, right? Or in a triangle, you see the triangle, you see the compression in RSI, and you wait for the breakout, or you predict the breakout, and then you capture that volatility. Okay, so the way I think about trading, I think about capturing volatility. An expanding leading diagonal is another example of a continuation pattern and another example of capturing volatility in the market. Now let me just kind of give you the example. Here's wheat. Here is a long-term trend in wheat all the way since 2008, okay? And we were looking at a possible turn here, big timing cycle low here, okay? And we were looking at this. I posted it on the weekly call. Some of you guys might be aware of that. Now, what we see at the bottom of a move after the turn, after the reversal pattern, okay, and we have a reversal pattern here on wheat, which is the double bottom, which we talked about in our last webinar, okay? So double bottom, this was a possible turn. We had a low window here as well, which is a low window in time. Now, what you see off the bottom after a major, in a major trend change, you see a structure called an expanding leading diagonal. Now, what does that mean? That means that your first leg is short. You have a 50% back test or so. Your second leg is longer. Then you have a 50% back test or so, and then you have a big move. Okay, so an expanding leading diagonal, another way of looking at it is it happens to be a megaphone right at the beginning of a trend. Okay, so that's one of the reasons why I like to find expanding leading diagonals and also contracting ending diagonals, which we talked about in the last webinar. Okay, so where we are here is I have the W, I have the X, and we should be moving up into the 490 to 500 area. That is if this is an expanding leading diagonal, and I believe it is, and what we should see is 50 back, trend line touch. We could even go from right where we are, but the thing we should not see this trend line break. If we get that, everybody, we're probably heading for a new low, or at least a full retest. Okay, so you see a pattern. It helps you improve your odds in terms of recognizing, first of all, this could be a trend change, okay? We haven't called the trend change yet, okay? So on a daily basis, trend change, I really want to see it get above, first of all, it has to break this trend line, okay, which has rolled, which I haven't adjusted yet, which now it's going to be persnickety and not let me adjust it. Always happens in a webinar. If it's ever going to happen, that's when it happens. So, we're looking for a high basically around the 500 area, and that's roughly speaking where, if you look at the 4-hour chart, roughly speaking where we're going in terms of this contracting ending diagonal. Okay, so in the next couple of days, I'm expecting an expansion in wheat. Now, if I'm wrong, the trend line breaks, and by the way, our stop is down here, because we are already off 1/3 of the trade. Our basic risk management methodology is previous swing, 50% back, you get out of 1/3, you put your stop to even. Why? Because when you trade futures, you always manage risk. It's the most important thing you can do. It comes first before anything else, okay? So risk management is most important. You have to use stops, or you have to manage risk through size. Either way is fine, but bottom line is just good technical analysis will not make you money, okay? Got to manage risk as well. So the patterns are important, because, if we get the turn that I think we're going to get here, guys, we're going to see a move. Okay, this is the kind of move you want to capture. And the nice thing about wheat, by the way, we're not even in the season yet. Okay, the season for wheat typically is in the springtime and early summer. That's when you get the spike in wheat seasonally. So we'll see what happens here. We'll see if this is actually the 18-month cycle low here. And that's wheat, and that's an expanding leading diagonal, something you look for. This last leg is the one you want to play. So, Jack, that's what I have to say about that pattern and how to trade it. And I guess we're ready for Art of Chart RSI patterns. And I'm going to throw it over to you for you to start. These patterns, by the way, just while I'm throwing this chart over, I'll introduce just a couple of comments. Jack and I work with RSI a lot. We probably do more unique things, in my opinion, than anybody else that I know of, at least. And so you're going to see some unique things here that aren't documented anywhere. Okay, so, like, for example, triangles compress on RSI. That's how you know you have a triangle. You have things in price that might look like a triangle, but they typically aren't. And there are certain patterns in RSI that if you can key on them, we're going to talk about the reversal formations only today. And the next webinar, we're going to talk about other formations like continuation formations on RSI as well. So with that said, Jack, go ahead and introduce your patterns, and then I'll have a couple as well to add.
All right. I'm using some longer-term patterns here, but I'm also using a lot of very topical ones, which are right now or this week or whatever. This is an excellent one I was looking at yesterday. Now, we had CL, we had a move down here, and I was looking at this, and at the same time I was looking at this rather nice looking falling wedge. Why is it nice? Because it's a beautiful trend line here. One of the keys to actually identifying and using patterns in any way is actually being able to draw a trend line. This is a surprisingly rare skill, one not possessed by some surprisingly famous classical chartists. This is a beautiful trend line. It comes back to here. It is in one of the main classical textbooks. It tells you that you should never use preceding highs or lows because they're part of the preceding trend. That's total garbage. Use them all the time. It always improves the trend line when you get it. This one is a beauty. 1, 2, 3. Underthrow. This is a gorgeous, gorgeous wedge. What's it telling us here? It's telling us when it breaks up, even though we don't actually have a divergence here. So we don't. My buy and sell signal I tend to talk about on my blog, we didn't get one here. What it's telling us is that when this breaks up to a high degree of reliability, this is going to go back and it's going to test the 70 level. And that's exactly what it did. What did that mean in practical terms in price here? It meant that even though this had actually broken down below the monthly pivot and the weekly pivot, and this was looking like it might be a bear breakdown, the chances of a retest of this high were actually pretty substantial. And we went back and we almost retested that today. Now, this has a message. This was basically telling me to expect a strong reversal here, and that's what I was expecting, and that's what I got. When you've got, this is a nice channel here on the RSI. When it breaks up, what do you get? A move to 70. It doesn't always deliver. Nothing always delivers. There is nothing in TA or the universe, frankly, that is 100%. with the possible exception of the expectation of dying at some point. But apart from that,
I just like to add one thing to that, Jack, which is, these patterns that we're showing you, they are 70%. The probability on all these patterns that we're talking about so far today, they're 70% patterns, okay? And if you find a pattern better than that, I would challenge your data, because there aren't very many patterns better than that. So, you always have the 30% risk, and I keep telling people that. And it's like, we have an 80% hit rate, 75% hit rate on the weekly call. It ain't getting better than that, guys. That's as good as it gets.
And then you hear the falling wedge breaks down, and then you hear them say, the wedge failed. The wedge didn't fail. It always had a 30% chance of breaking down. It just took the lower probability path.
Yeah.
And that's the correct way to think about it. It's not a matter of putting it into a box and expecting it to stay in it. That's not the way life works, reality works, or patterns work. Certainly not the way the market works. Anyway, this is looking at the ES. Got a series of very nice falling wedges here. Got a lovely falling wedge there. We've got a falling megaphone here. These are all basically trending patterns. What are they telling you? They're telling you to expect a strong reversal when they break. You don't always see these patterns, and that's good, because when you do see them, they are a lot more significant. They are a lot more significant than they would be otherwise. And these, you've got a whole series. If you can see, I generally only think that these are worth looking at if you've got at least one decent three-touch trend line. Got a beautiful one there. Ideally as perfect as possible. Got another one here, 1, 2, 3. Actually, model trend lines here. 1, 2, 1, 2. That's a 2. Do we have a 3 here? Yes. From the above on that one, below. Unless it's got a three-touch trend line, I will look at it as a possible, but not as a probable.
Yep.
Because sometimes things just look as though they might be something, and they're not. The vaguer something is, the less notice you should take of it, as a general rule. All right. Looking at hang on, RSI. Sorry, I've got a cold. I've got a bad cold today. So we went through triangles on RSI last time. Really, we probably don't really need to address that today, do we?
I think any reversal pattern on RSI, we should tell them what the art of chart RSI patterns are. These are the reversal patterns in RSI, and there are a handful of them right now that we're going to share, and then we'll do continuation patterns on the next one.
All right. Well, there are two types of reversal patterns on RSI. The first one is actually divergences, negative divergences. What is a negative divergence? It's when price does one thing and RSI does the other. So you get a higher high on price, as you get here. I actually mark these. You'll see these. You'll actually see thousands, tens of thousands, I suspect, of examples of these marked up on the charts of my blog. So should you wish to have an urge to have a look at thousands of these to see how these work, you will see them all marked on the RSIs on practically every chart. So you can go through. There are a vast number of examples. But here you've got. This is another lovely trending little pattern on RSI, of course. Nice falling wedge, broke down. Made the 70 level, nice example. But here you've got, right, this is higher high on price, lower low, and a breakdown from there. Target, it won't always get there, but it'll generally make the near miss target, which I have in this level here, sort of 30 to 35. The full target is the 30 level. I use these all the time on every time frame. I use them all the time on the 1 and 5 minute for intraday moves, all the way up to monthlies. Although obviously the monthlies tend to move a bit slower. So if you look at all of these charts, they're on them all. Let's have a look at the oil chart. Yep, this is an RSI triangle, by the way. This is on both RSI 5 and 14, and interestingly, there wasn't really a triangle on price there. You do sometimes see that. Which is, I'm sure.
What time frame was that?
This one is the daily chart.
Yeah, I think there was a triangle there. Hold on, let me just take a quick look. Okay. I'd be surprised. What date was that?
It's not springing to the eye, I got to say. This is basically during June of last year.
16. Yeah, let me take a look real quick. Yeah, there's a triangle there. All right, very clear one.
Okay. In that case, it must have been a layer wave triangle.
Yeah, it is, and it's very, very rare. If you see compression on RSI, guys, that is a very important signal, and I would never ignore it. It's like an ATM machine as far as I'm concerned. It really is, because you can really make some money off of the move that happens outside of that compression.
But a classical triangle looks like this and looks like this. That's what a classical triangle looks like. This is obviously relating to something that is a triangle, an Elliott wave triangle, but doesn't actually look like a transclassical triangle, i.e. we have a directional pattern here, although it's not strongly directional. So, but this is actually a triangle setup, and you can see it easily by looking at the RSI. The RSI will often give you a truer picture than the price will. It's divergences, sell signals, buy signals are all in blue. These are all over my charts. If you have a look at the patterns here, double top, double bottom, double top. Looking for head and shoulders. Head and shoulders I'm particularly fond of. This is a lovely little head and shoulders on the RSI 5. Breaks down, delivers a touch of 30. This is what I would normally expect to see. I've got a couple. I'm just looking at examples at the moment. Was it US dollar I was looking at? Okay, let's have a quick look and just right. Here's another one I was looking at today. CL I marked on here. Possible small head and shoulders forming here on both price and RSI. A break below both looks for 53.25 area of high probability. So what I'm doing is I'm referencing this little head and shoulders here, and the far nicer, and you often will see that, little head and shoulders forming on RSI, and if this breaks down particularly, I will take a breakdown on this price actually more seriously as a directional statement. Yep. Although on an hourly chart it has to close the hour below. Yeah. Intra doesn't matter. So
that is an art of chart RSI pattern. Okay, so that's very unique to our work. You're not going to see that written about anywhere else. Our divergences, it's been written about before. But that is something unique to the way that Jack and I work. Yeah.
So we've done a lot of work on RSI, because RSI is actually one of the most useful tools out there.
Yeah.
Very so. All right, great. Shall I throw it back to you, Stan?
Yeah, sure. I'm ready. I want to introduce two patterns. I'm going to talk a little bit about the triangle pattern, but I want to talk about the RSI triangle pattern as a way of ending a move. Let me just make sure I'm on the right screen. I am. Okay, so here's natural gas. Remember I said there was a flat here on natural gas, an A, B, and if you guys remember, we were looking here potentially for a turn. Why? It was the 618. Where have we gone to? I haven't put this on this chart yet, but we have gone to the extension target, the 2.618. So that's where we are now. I want to talk about an RSI pattern, though. That's something I mentioned earlier. I just wanted to show it to you. The thing I want to talk about here is what I call the high before the low pattern. Okay, so on RSI, here you have what I call the Rsi Price Cycle. Okay, it's a continuation pattern on RSI, but we'll talk about that in another webinar and how to draw it and all that kind of stuff. But bottom line is this. Here we are all the way at the bottom of RSI. You would think buy, 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 right? But I would say no, there's no divergence there. This is a 5-wave sequence. Okay, you don't get divergence everywhere, by the way. Right there, that A wave, no divergence. Why? Because it's an A wave. You don't get divergence on every sequence, okay? 5-wave sequences, you get divergence. It's very, very reliable. Now, you might think, oh, look, we're way oversold. Let's buy. So you buy, and what happens? You get sort of hit in the face because we have to put in the divergence leg. So this pattern is fairly reliable, again, 70% or so. The high before the low, typically you see a break of the RSI price cycle, usually in 3 waves. You see the 3-wave move in RSI. Then you get the divergence leg. This is the high before the low. It's a nice predictor of the coming turn. And by the way, very often, this little 3-wave move, if you look at this little 3-wave move, it's a little pennant formation, okay? And that really calls for a new low, okay? Now, to make this sort of current right now, let's just look at RSI. We have a 2.618 down here, which is a typical, we almost hit it already, by the way, so we may be done. But this is a potential high before the low. Here we have a cross above the RSI price cycle. We've crossed it. This is the high potentially before the low. By the way, if I zoom in, do you know what pattern that is right there? that's a flag, guys. Okay, that looks exactly like a flag, like one of the ones that Jack just mentioned. So we're about to get a retest. Okay, and so what I'm looking for on this instrument is this. Okay, and it could just be a double bottom. Okay, and if it is, that's another reversal pattern, or it could even be a lower low down to $2.60. Okay, and so we'll see how it works out. But you know, this is what I call the RSI pattern: the high before the low. Okay, a break of the cycle, then the divergence move, and this is a flat, so this is a 5-wave structure. I'm looking for that divergence move next, and then from there we have a nice reversal coming, in my opinion. So that's the high before the low pattern. Okay, so and that's on a number of charts. Let's go to gold. I'm going to show you the second RSI pattern I want to talk about, which is the triangle. But the way I want to see or talk about the triangle is as an ending move, as a reversal pattern, okay? Look at gold right now. Take a look at where we are right here. There's a little pattern in RSI, and by the way, this is a triangle, which is a compression move, okay? And you typically see that, and then you get an expansion, okay? So that certainly did expand a lot more than we thought, by the way. But bottom line is, here we have a break of the price cycle, and we have a triangle setting up, okay? This is signaling a possible reversal. Now, the thing I do is I pay attention to the charts, not what people say. Everybody is bullish on gold. Everybody's like, oh, we're going to 1,400. And by the way, I agree. I think this year we're going to get a major expansion in gold to the upside. But right now we're approaching the 150 DMA, and we have a 3-up today. And we mentioned that on the feed today, the 3-up, and we had a target for it and all that kind of stuff. But bottom line is, this is signaling a potential turn. Okay, and that's coming strictly from RSI, not listening to any nonsense on Twitter. Okay, there's a lot of nonsense on Twitter, guys. Be careful what you listen to. But the bottom line is, we are expecting 1291s, but I would not be surprised to see the 150 DMA cause a reversal. I would not be surprised to see this little triangle that's forming to do that. Okay, so I just calling that to your attention. I'll have more details as to this possible reversal back down to the trend line here later this evening, but it's just another example of an RSI pattern that we see a lot, and Jack has done this a lot himself in terms of these triangles. It is a divergence as well, but we are nowhere near like 75 on RSI. Okay, this is happening here as a potential reversal pattern. So that's just another one to look for. So Jack, that's all I had, those two patterns on RSI as reversals. Ready for questions? Hey Jack, are you there? I think you might be.
Yep, yes, Dan. Sorry, I was muted for a moment.
Yep, yeah, no problem. Okay, let's get to questions. Okay, the options page is updated every Monday or whenever a trade arises. Yes, it is, David. That's right. Check it daily or weekly. David, if you pay attention to the Twitter feeds, we announce changes on the options page whenever we make them. So typically we record a video that's recorded on the weekend. We make the post, and the video talks about potential trades we may make, okay? And then during the week, when the setup happens, like for example, we haven't gotten short, we haven't done our spread for Amazon yet. We talked about it, but we haven't pulled the trigger yet. So, you know, when we pull the trigger on a trade, we tweet it out, and it appears also on the options page. Okay, so just so you know, so pay attention to the Twitter feed. Mine, also the private Twitter feed, also our public Twitter feed, _art_of_chart. Next question, it's Fred, and what are the clear signals that a flat is being formed? Also the best ways to identify when the C leg is about to start. Well, Fred, you look for 3-wave sequences, and the example today, let's go to the E-mini. This is the one I shared at the very, very beginning. I'll give it a minute to transition. And you'll see 100% fibs. I mean, it's pretty simple to identify the leg. So we have a 3 down, 100% fib. Look at it, 23.56, right? We have a 3 up, where to? 23.67. Okay, so 3 down, 3 up. There's your flat, there's your setup, and that's one of the reasons why I said this morning, you know, potential flat, and boom, we mentioned 51.52. We didn't get there completely, okay, but close enough for government work as far as I'm concerned. So that's kind of how you identify it.
Actually, what I would say is, if you just look at any chart covering a fair amount of price, and you look at the number of times you see a test of a low, a marginal break below, a lot of those are flats. And then a strong reversal back up into continuation. A lot of those are flats.
This is just an amazing example of that. Just a marginal break below, right? Here's a marginal break above. I mean, it's just classic, very classic example. Okay, on CC, that's cocoa. The impulse up last week was a clean thrust, whereas the movement up this week is a choppy channel, a bear flag. Can you review and clarify how to differentiate between an up channel and a bear flag? That's a very good question, actually, and I don't know that I can actually clarify that. But we can certainly try. Jack, I'm interested in your comments on this. Let me show you the chart that
I am looking at it right now. Actually, I'm seeing if cocoa, to be honest, doesn't particularly like trend lines, which is one reason I don't usually offer a comment on it. But actually, I think it might. Yeah,
cocoa is a highly manipulated. It's highly manipulated, guys. Yeah, and so you just need to know that going in. Okay, so I think you're talking about this flag here, right? Does that qualify? Yeah, sure. That qualifies as a flag.
Yep.
Okay. Now, what I would do...
Potentially, that is a bear flag, but they are not in the context of the overall, because if that first one is a bull flag, then that has a minimum targeted retest to that high, and it should make it.
Yep. And again, the way I would do this, a flag, very often, you see it in three, right? So there's your A, there's your B, there's your C. Let me clean it up for you so you can see it. And the number of times that you get a flag that goes to the 100% fib, it's quite often. It's either the 100% or, so 36s, you know, we find resistance at 36s. You could say we had resistance there once, but I think if we see resistance there again, the bottom trend line is in danger and we could see another low, which, by the way, could be a reversal pattern. We could see a full retest in cocoa. It's possible. Okay. What you're saying, Jack, is you would expect a double top here?
Yes. What I'm saying is, and chances are, well, no. What I'm saying is, it's going to retest that high, and at that point, we have a very important inflection point, because at that point, we will be at declining resistance from last year's highs.
Yep. Yep.
And at that point, it either breaks up or it doesn't. And if it doesn't, then chances are it fails pretty hard.
Yep. So I'd be watching the channel because basically when the channel breaks either up or down, you're going to have a very clear signal. The other thing to watch for here that I would mention is this. I think that we have that formation, and I think we have, in terms of looking at this in more detail, Fred, I have to look a little, I'm looking at RSI, but I'm also looking at this. I think you got a 7-swing move here. I think the 7 swings will go up into this area. Which is on a short-term basis 65s and then a back test 50% and then target up at 2134. So I would just say that just because look at where the upper trend line is. So that's what I'm expecting, but we'll see what happens. So that's cocoa.
I think cocoa is on the verge of proving me a liar on this trend line thing. It's actually, I've got a really nice falling wedge here. And on the retest of this high, we'll be testing falling wedge resistance, and it's a fairly mature-looking wedge. If it breaks up, chances are that's for real.
You're looking for you're looking at the hourly chart then, huh?
I'm currently looking at the daily because I'm looking at the trend all the way back to the high in August.
Yep, we have a longer-term trend line here, but then I think Jack's talking about this one here, which is also important.
That's what I would see as the current one,
and that's where we have our target right there.
Yeah. So I mean that's the bigger picture.
Okay, on expanding leading diagonals occur only after a trend change. It is a signal that this could be a trend change. So if that lower trend line holds, Fred, Leading diagonals are often found after the turn is made. It's one of the ways that, and by the way, go back and look at multiple charts. You'll see what I'm talking about, especially in commodities. And you'll see a megaphone as the first pattern off the bottom, which is an expanding leading diagonal. What then is hidden divergences versus normal divergences? Jack, what's your sense of that?
Sorry, what? A hidden divergence?
Yeah, that's something I've never heard of.
What is it?
Are you talking about an RSI divergence called a hidden divergence? And that's not something I'm familiar with.
I'm not familiar with hidden divergences. Either you can see divergences or there are no divergences.
Yeah, that's the whole point of it. Now, there are also divergences on MACD. And we have a video on MACD and divergences and stuff like that, so that's something to look at.
There are no secret societies and funny handshakes among divergences.
Yeah, not that I'm aware of.
They're all pretty straight up.
Okay, Diane has a question. When using RSI, do you start with a daily chart and then go smaller, or do you start small and work larger? And do you have a go-to time frame for day trading versus swing trading? I think that's very individual, but go ahead, Jack.
Well, normally for the, it's no accident that generally speaking I'm using the 1 and the 5-minute charts for intraday moves. I'm often referencing the 60-minute and 15-minute chart. I'm never looking at the daily chart because intraday moves, that's really just entirely irrelevant. Although I might be looking at the big levels for possible support and resistance levels, i.e. the daily middle bands, pivots, and so on. I think in terms of where I work in direction, I think I generally start with the daily chart and I work in both directions. So I'll work up to the weekly, and the monthly, and I'll work down to at least the 15-minute, and if I'm charting it in detail, all the way to the 1.
Yep, I would agree with that. The only caveat I would say, Diane, it depends upon volatility. I don't know if you remember our, limit down day that went that we limited down and then we went to 1822. But on that day, I was day trading with an hourly chart. Okay, so when volatility is really, really high, trying to do something. And by the way, most of the time, a 1-minute chart is just great for day trading. I personally use a 3200 tick chart because I like to see formations without the overnight action kind of clouding up my pattern recognition brain. Okay, so I use tick charts a lot and for day trading, but if volatility spikes and we get a VIX up in the 40s, I'm using an hourly chart, and that may sound strange to you, but let me tell you, it works. And it keeps me out of the noise level because 5-6 handles in that kind of volatility, that's noise. That's nothing. That's just noise. Okay, with that said, let's look at the next question. Sanjay, GC in a possible flat with B being completed today and C starting down, that's a reasonable conclusion. That's a reasonable conclusion. I think that is one possibility. That is something to look at. By the way, that matches the triangle that I'm seeing right now on RSI. And another one, don't ascending triangles usually break up? Ascending triangles, RSI. Jack, ascending triangles?
What was the question exactly?
Don't ascending triangles, RSI ascending triangles, usually break up?
I can only recall seeing 2. I'm not sure I can apply a word usually to that. I think the patterns on triangles do not behave in the same way as they do on price. For instance, on price, I would reckon that on a rising wedge, only perhaps 1 in 4 might make it back into the fall reversal category. Whereas actually on RSI, I would say it was 3 out of 3 to, well, it was 8 to 9 out of 10.
I would say ascending triangles and descending triangles, depending upon where they are. Okay, so if you look at a descending triangle, that's ending really right at 25 on RSI, those are going to break up. Okay, and I would say also in an ascending triangle that it depends upon where you are in RSI and how the triangle is being presented. If you're in an ascending triangle and you're at RSI 50, I would agree with you. I think those would break up. I would expect them to. Okay, and I don't have any data on that, by the way. That's just an opinion. I like to backtest systems and have, a reasonable, data and proof that this pattern works this way or whatever, but I have no data on that to back up what I just said. What RSI parameters do you guys use? Except on a monthly chart, I use RSI 14s, okay? Sometimes I drop down to a 5, but most of the time I'm using 14s, and on a monthly chart, I'm using RSI 7, and it just helps me see the patterns more clearly. Jack, what's your?
It varies. I'm either using the RSI 14 or the RSI 5. I occasionally use the RSI 2 as an indicator, but the main reason I've got that on all my charts is so I've got somewhere to add comments that I'm not really using for anything else. So I think in terms of which time frames I use them on, I start using the RSI. I use the RSI 14 on the lower time frames. I start using the RSI 5 and taking it into account on the hourly chart. That's often becoming the dominant RSI by the weekly chart, and it's often the only one I'm looking at on the monthly.
Okay, let's get to the next one from Joe. Honest question: are your posted profits on those future trades? I assume you're talking about the blog post, the weekly call. Is that real money or all hypothetical? That's real money, Joe. Okay, actually, on some of those trades I traded more than 3 contracts, so. I am a trader, not an analyst, and I think Jack is the same way. Most of our money does not come from this site; it comes from trading. Okay, and so I'm putting my granddaughter through college through my trading income at this point in time. Anything you want to add to that, Jack?
No, not really.
Okay. I'm caught on the wrong side of a trade with an options vertical call. I would encourage you, send me an email or hit me on the side on Twitter, and I will do my best to help you with that. At this point, this webinar, I don't want to do trade repair here in this webinar. And by the way, we should do a webinar, Jack, on trade repair. I think that is a skill, and that's something we should talk about.
Yep.
Okay. Have you considered going solo with this service? Blah, 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 blah. And Jason, I'm not going to answer that question. NG seems to be making an expanding leading diagonal on the hourly. Can you zoom in and discuss NG? Let's just take a look at NG here. And what time frame, Fred, are you talking about? I think you're probably talking about a larger time frame. Looking at the daily here, you're talking about this. An expanding leading diagonal? I don't see it, Fred. I don't see it.
What high are we looking at this from?
Well, it's an expanding leading diagonal, which I'm assuming hourly chart last 2 days. So this is, let's drop down to an hourly. Time frame is everything.
Oh, okay. Yes, I mean I've got a rising megaphone I was talking about as. Yeah. From the low.
It is certainly possible, and what Fred is talking about is this right here. I'll mark it up. Is this a potential expanding leading diagonal? The answer is yes. How would you know if that is the case? By the way, the reason I don't like this is we don't have any divergence here. Okay. By the way, could this be the 30% case where it doesn't work? Yeah, it is. And let me just get rid of this. So what you would see tomorrow, and it would be tomorrow, it would be that. All the way up, it would reach for that trend line. It wouldn't quite hit it. Okay, so we would see that tomorrow if this is the case. But my counterpoint, Fred, is that, and let me go back to the 4-hour just to make the counterpoint argument. And by the way, it's good to look for the patterns, and that's by the way, Fred, good eye on that. Okay. But what I want to say is, where's the reversal pattern here? I don't see the divergence. Okay, there's no divergence here. Okay, there's divergence here. Look at this low. There's divergence there. There's divergence there. There's a reversal pattern here. There's a reversal pattern there. So that would be my counterpoint. And by the way, I could be proven wrong. I think you have a very good observation there. Any comments, Jack, on the hourly chart?
Yeah, through the chart. I'll just show you what the NG chart I did this evening.
Okay, hold on. Throwing throwing you the chart. I think this is our last question, folks, and I think we're going to end this right after we're done with this chart.
Yeah, this is actually a good example because this is another head and shoulder pattern. Potentially. It hasn't broken down yet, but this is another head and shoulder pattern on the RSI. Now, I was talking about it this evening and saying that if this broke down, then the chances are we're going to see a retest of the low.
Yep.
And that would be fine as long as this channel support held, and that would probably be the second low of a double bottom to take us back to channel resistance. I've got this as a falling channel from this high, which was 3.5 area, 3.45 area.
And I want to say, I was talking to Jack today about pulling the trigger on a potential long here for the weekly call, because I'm looking to get long in natural gas, and you know, we hit the 50 back area at 27, 20, 24 today. So, you know, you might be right, or you might be right about that, Fred. I chose to wait for the divergence setup and the double bottom. So at this point, we'll see how it works out tomorrow. But that's a good call on your part, Fred. That's a good call. Let's see if there are any last minute questions here. I don't think so. I think we're done. So Jack, that's a wrap.
Okay, brilliant.
Yeah.
Well, pleasure as always, mate.
Yeah, same here. Enjoyed it. And everybody, great questions, by the way. Thank you very much. Everybody take care. Trade them well. Bye-bye.